PGIM India Mutual Fund has come up with a new fund offer, that is NFO. The name of this fund is PGIM India Retirement Fund. In this video, we'll talk about this fund, understand the importance of retirement solution and investment objectives. We are confident that this information will help investors about this new fund's objective and its future potential. Most of the information for this fund has been taken from the new fund offering document. Where would you like to see yourself in the next 20 years? If you're imagining yourself as a person enjoying the financial freedom and away from day-to-day hustles to enjoy a peaceful retirement life, this video will probably be useful. It means you're already thinking about retirement and are serious about it. So, planning for retirement is a top priority item for you. You are not alone. PGIM India did a survey to understand how people are approaching retirement in India. They've noted that retirement planning is higher on the priority, moved up by 2 points from 2020 to 2023. It is now the sixth top priority of Indian people. The life expectancy of Indians is increasing and expected to reach 80 years in 2024. Hence, you should have a sizable retirement corpus which should last at least 20 to 25 years after your retirement. A rule of thumb says that you need to have minimum 25 times your annual expenses, which will provide financial freedom for 20 to 25 years after your retirement. This is a substantial corpus. Not too many people are fortunate enough to have ancestral property. In addition, majority of Indians do not have a guaranteed pension. Due to these reasons, they have to depend on their present income to build for such a corpus. What is the best way to accumulate this corpus? If we look for the data from this millennium, which is 2001 to 2023, we'll see that equity as investment class provides the best return over this long term. Fixed deposit grew 4.3 times over this long term, whereas inflation would destroy the corpus by 3.8 times. Hence, fixed deposit can barely conserve the capital with minimum growth. Gold is another asset which grew by 13 times over this period. However, the equity gave a significant 27.8 times return over the same period, which clearly indicates the power of equity for long-term wealth creation. PGIM India Mutual Fund has launched PGIM India Retirement Fund. This is an open-ended solution-oriented scheme for individuals who are looking to save for the long-term goal like retirement. The asset allocation for this fund is similar to aggressive multi-asset allocation fund. As per the scheme documents, this fund is expected to invest 75 to 100% of its assets in equity or equity-related derivatives. Among the equity section, the fund will have a strategy to invest minimum 25% in large, mid, or small cap funds. This fund management strategy is one of the unique features of this fund. If you see the data over the last 17 years, the market return changes over all these categories. Each of these large cap, mid cap, and small cap indices outperform each other with no absolute winner. The fund will also be expected to invest 0 to 25% in debt securities and money market instruments depending on the market cycle. The fund will also invest 0 to 10% asset in REITs and NYTs as an alternate investment strategy. The overall strategic and smart allocation will help the fund to maximize the returns as well as minimize the downside risk. Investors are often worried about short-term market fluctuation and hence tend to avoid equity exposure for the purpose of building retirement fund. Capital appreciation becomes the only objective for such a conservative approach, and by considering that situation, they tend to miss out on wealth creation. The PGIM retirement fund addresses this short-term market fluctuation risk through a 5-year lock-in for this fund. Why this 5-year lock-in, you may ask? The answer to this question lies in the rolling return of S&P BSE 500 TRI index, which is the benchmark index for this fund. Historically, it is seen that the probability of negative return reduces as the holding period increases. This is evident from this chart. If you hold your investment in S&P BSE 500 index stocks for 5 years, you will have only negligible probability of having a return of 0% or less. On the other hand, there is a 67% probability of a return of 10% or more. The fund with 5 years lock-in ensures that the investor is protected from market downturn. This lock-in aspect can be compared with two other equity-related products which are used for building the retirement corpus. Those two are NPS, that is National Pension System, and ULIP, that is Unit Linked Insurance Product. Both NPS and ULIP have a long lock-in period, longer than this retirement fund. While NPS has less expense ratio, ULIP has a much higher expense ratio. Thus, keeping in mind various factors, this retirement fund has highest liquidity among these three categories. As mentioned earlier, PGIM retirement fund is benchmarked against S&P BSE 500 index. Both the benchmark and the fund are considered as high risk category as per Riskometer. The fund is presently open for NFO and will be open for subscription till 9th of April 2024. For lump sum, the minimum investment amount is 5,000 rupees with additional investment of 1,000 rupees. For SIP, the minimum investment amount is 1,000 rupees per month with a minimum of 5 months commitment. Investors should also be aware that mutual funds are always subject to market cycles and hence the return cannot be guaranteed. The PGIM retirement fund can show lower volatility than other equity mutual fund categories through its investment strategy. In addition, the lock-in provision reduces the market downside risk. Any potential investor should not consider this as an investment advice. They should consult their advisor before subscribing to this mutual fund. They should also refer to the scheme information document. However, if the investor is looking for long-term capital appreciation with low downside risk, this fund may bring rewards. Hope you found this video informative. If you like this video, please don't forget to like it and subscribe to our channel. Also, press the bell icon to be notified of our future uploads.